In today's disruptive world, enough and more has been talked about the Indian consumer and the Indian FMCG sector. Which way is the sector moving? Which way is the sector headed? What are the big and mega trends we should focus on? What is the reality when it comes to Indian consumer? Now these are questions which have been debated and deliberated, but to really get the right answer and to get a perspective on the FMCG sector, I have a guest who needs no introduction whatsoever. It's a rarity to have the CMD of HUL on ET now. Mr. Mehta, welcome to the show. Thank you for joining us. This is the first time you're interacting with me, at least on this forum. So more than you, I'm excited to meet you.
The first is delighted, absolutely delighted to be on the show, and compliments of the season to you and your viewers. I wish all of you a very happy and successful 2019.
Thank you very much. And if I can take a leave from the word success, I guess last couple of years have been excellent for your company, both in terms of margin, market share and volume growth. Is this just the beginning, or this is as good as it gets?
Often people just focus on the quarter or a couple of quarters, and we are a business which runs for the long term. We've been in the country now for 88 years, and I believe we'll remain here indefinitely. If we look, just pause and reflect on, instead of the last 5-6 quarters, on the last 6 years, for instance. In the last 6 years, it has been a pretty challenging environment. We've had 2 consecutive years of drought. We've had change in the government. We've had regulatory changes in a big way. And in all this context, HUL has grown its delta turnover by about 12,400 crores. 12,400 crores, when you look around you, this in itself would have created the largest FMCG company in the country. Our profits have more than doubled. There is a rhythm and consistency. In 29 out of 30 quarters, we have increased our margins. The only quarter being the demonetization quarter, and there also we took a long-term view. We will not curtail our investment behind our brands and market activities, and during the same period our stock has been re-rated, while the index, or the FMCG index, has grown by about 1.9 to 2x. We have grown by 3.5x, and we have become one of the most valuable companies in the country. And there won't be many subsidiaries of parent company across the world which would have a market cap exceeding $50 billion. Yeah. So that's been, if you may say, a snapshot of the scorecard for the last 6 years. But I think what is more exciting is the future of India. We are at a cusp. We have a challenge. We need to cross the chasm between the 6.5%, 7.5% growth which we have been delivering in the last few years to the 9-10% kind of GDP growth rate, which we need and which we believe is doable. In many ways, we have to replicate what China did over a 20-year period, when 2 out of 3 years they had double-digit growth. Now look at, from an FMCG consumption in India, it's about $29 per capita, with rural being half of this national average. And this, when stacked up against developing countries, not developed countries. Yeah. Indonesia is 2x, China is 4x, Philippines is 5x. So I can very confidently state that the best of Hindustan Unilever is yet to come.
What is the women's market curiosity is that 10% volume growth for 5 quarters in a row is absolutely commendable, because the base was large, has now become larger. Do you see, without getting into a specific number, do you see this kind of an volume growth to sustain for 3, 4, 5, 6 quarters?
Now, FMCG sector is not a sector when you have a bull run in the economy, it necessarily grows at a very fast pace. Similarly, it's a much more resilient sector. When times are tough, it's not that you stop cleaning your teeth or stop bathing. What happens is consumers downtrade to brands which are more economical. And instead of having 5 bars of soap in the bathroom for every individual, you may make do with 2 bars of soap. Yeah, that's how the rationing happens, but you don't stop bathing. And in a country like India, where if you look at your last 20 odd years, every year about 1% of the population has been moving up from the bottom of pyramid to the middle class. These people have more aspirations. They want higher order benefits. They clamor for better products. And all this augurs well for the country. And if you're a big player in a sector, then this entire ecosystem of macroeconomic consumer confidence does play a part. But the potential for FMCG in India, by the figures that I quoted a while back, is massive. And everyone should treat FMCG, like I said, on 2 platforms, a mirror on the state of the economy and a driver of consumption in the country.
Now you're sounding bullish and you're confident that the best
I'm
is yet
optimistic.
to come. Okay.
I'm very optimistic about the country, and I'm very optimistic about Hindustan Unilever's future. Here I'm not worried about a quarter here or a quarter there. I'm looking at it from a long-term perspective.
Is growth coming to you because of penetration? Is growth coming to you because of market share gain, or this is simple existing customers who are moving up the value chain?
See, let me describe what our focus has been, which in many ways you will be able to also decipher the strategy of ours. Yeah. First is, there is a core of the business, or what we call as the core of the core. Yeah. In core of the core, what we have been doing is, first, based on our winning in many India strategy, for each cluster, we have defined the core. So core for Tamil Nadu will be very different from core in Uttar Pradesh. Yeah? So we define the core. In core, we do 2 jobs: drive penetration and increase weighted distribution. That's the focus. Now, it's not easy to drive penetration, especially where the penetration levels are already high. So you need brand saliency, your brand equities have to be strengthened, you have to constantly innovate and renovate the brand. And third, very importantly, you need to have engagement platforms which are purpose driven. Let me give you some example. Our biggest brand in our portfolio is Surf Excel, yeah, which is inching towards the 5,000 crore mark, which would be the size of many companies. Then the second important job which we have as market leaders is market development. Market development is creating the categories of the future. This is the hard grind. Today, we have scaled it up to an extent that our brand consumer interactions reach about 200 million people every year. Yeah, this is massive investment. It is about educating consumers. It is about sampling. It is about experiential marketing. And we have made market development into a science. When the penetration levels are less than 10%, we seed it. When it is anywhere between 10 and 20%, we accelerate it. And about 20%, we explode the categories. Yeah. We have about 20% of our business which is growing at 2x the market, the average rate of growth of the company. Yeah. Because this is our investment into the future. And even during the tough times of demonetization, we did not shirk away from investing behind market development. The third important leg of our business is premiumization. Now, premiumization, I always say that the history of Hindustan Unilever is intertwined with the history of the country. Yeah? If you break up the market into segments, you have, say, average price of 100, below 80 is the mass, 80 to 120 is the mid-tier or popular, and above 120 is the premium. If you take market, the market is about 28% at the premium end. Okay. The balance 72, the biggest chunk, is in the mid-tier, and about 30% is in the mass. Every year, just like the population shifting from BOP to mid-tier, about 1% is shifting towards premiumization. Now, why Hindustan Unilever is getting future fit? If my market share is 1x at mass, it is 1.2x at mid, and it is 1.3x at premium. Yeah? So it's a conscious strategy that we have driven for premiumizing and giving higher order benefits in sync with the shift of socio-economic demographics in the country. Yeah? So these are, if you look at it from driving our strategy, then the other important bit is fuel for growth. We may be a very profitable company, a very valuable company, but we have a huge laser-like focus on cost. Any cost which doesn't add value to the consumer or the company, we take it away. For the last few years, we have been generating savings to the extent of 6 to 7% of our turnover. Now, 6 to 7% of our turnover at our size is big. So what do we do with the money? We enhance the product qualities. It goes in innovating our products. It helps us in building the capabilities. And then we also have a rhythm on profit delivery. 29 out of 30 quarters expanding the margin is something which we can be very satisfied about. And this happens because of the focus on cost.
So I meet you after 2 years, would you say instead of 29, it's been actually 50 quarters?
I never give guidance, but our quest will be, if you look at what's my 4G mantra of growth. First is it has to be competitive. Second is it has to be profitable. Third is it has to be consistent. And the fourth is it has to be responsible growth.
But pardon my curiosity, and you'll appreciate my question. It's purely directed towards the margin aspect once again. Can I safely assume that 20% is the new reboot for HUL margins?
We have crossed the 20% threshold.
You've crossed it, and have you permanently crossed it? Minus 1 quarter here or there, which could be variable.
We would like to retain it at this level.
Okay.
And then together with the growth, you get the multiplier impact. But let me be very emphatic. If, for instance, there is today an indiscriminate price war, we will defend our turf whatever it might cost.
But we've not seen a big price war in the last couple of years.
See, there is sanity, there will be competitiveness, and I think it's in the interest of everyone that you don't get into an indiscriminate kind of price war. And that happens when the attacker knows that the defender will blink. When you know that the defender will not blink, then it doesn't help the cause.
When you see a disruptive name like Patanjali suddenly coming and shaking up the basic dynamics of pricing in the sector, what's been your learning and how have you responded?
Yeah. First is we have to accept that in a country like India, the competitive intensity is always going to be big. You have global players, everyone. Look at it from a lens of global players today. If you don't win in India and China, you won't win globally. Yeah. So India is a key part of the strategy of every big company. Second is you have very good local competitors. You have good regional competitors. So competitive intensity is bound to be there. Yeah. I think as a company, we envisage many disruptions, but you will never be able to forecast with high degree of precision all the disruptions that happen around you. Naturals is not a trend which is just shaping India. It is a trend which is shaping the world in many ways. And it comes from a much deeper cultural insight of the search for authenticity. Yeah? On one hand, you're part of the global world. Yeah? You're using the same iPhone with the consumers in the US are using. Yeah? You're watching similar films on Netflix that the consumers are watching. You go to the same travel destinations. But at the other hand, you're very keen to go back to your roots. You want to understand your cultural ethos. Yeah? And that is reflecting in more of herbal products, more of Ayurvedic products, more of products which have less chemicals in it. So that's a trend which is manifesting in different ways in different parts. Now, as a business, we had identified this trend at the beginning of the millennium. And that is when the brand Liver Ayush was launched. Yeah? I think where you can accuse us that we did not persevere with the same determination that we do in many other categories.
Was that a conscious call, or you would call this as missed opportunity?
Many times what happens is you're conscious of the opportunity, but there are so many multiple opportunities that you focus on a few and not everything. Yeah? When the natural started in a big way, we developed a very clear three-pronged strategy. One is we have to have specialist brands. We had some like Hamam, but then we did a fabulous acquisition called Indulekha.
Couple of years
It's
ago.
doing amazingly well. Then we said, let us set up a completely different master brand called Liver Ayush, which is doing very well in south part of the India, which is a bastion for naturals. And then we said, in our other big brands, can we get into natural variants? Lifebuoy Haldi, Fair and Lovely Ayurveda. Now, for the last couple of years since we made that strategy, we are very pleased with the performance. We are again growing at 2.5x the average rate of growth of the company. And this is something which will continue the thrust, and we'll keep strengthening our naturals credential.
So that brings me to my next obvious question, which is your acquisition of Horlicks. It's a large acquisition, a very big commitment. I think the biggest commitment which you've done, in a long time.
Or I believe any consumer company in India, I don't think it's been such a big acquisition.
It's a very big acquisition, $4 billion plus. What prompted you to step into a category which now, where the category when it was with Glaxo Consumer, it was a category which was slowing down. It's a category some would argue that it represents sugar. It's a category where some would argue that there are question marks raised against the whole availability and the usability of sugar.
Sure. Yeah, if we look at, I've got three divisions in the business. In beauty and personal care, by far we are the market leaders. No one comes near us. Home care, we are by far the biggest company. When it comes to foods and refreshment, we have a very decent business. Now, if you look at HFD as a category, this is a very attractive category. And this is a category which is about 8,000 crores in size, where GSK Consumer Health is clearly a market leader. The penetration levels are just 25%. Just 25%. And we as a business operate in categories like fabric solution, where the penetration is universal. We operate in categories like tea, where the penetration is universal. In the last 6 years, both in tea and fabric solutions, our turnover has grown by 1.9 to 1.8x. So nearly doubled in 6 years. So we know how to grow the categories where the penetration is high. There are not many brands in India which are as trusted as Horlicks. And there are not many properties in the country of this scale and size and with this potential. Now, you have the category expertise of GSK Consumer Health. You have the innovation pipeline of GSK Consumer Health. You have the R&D muscle. And you bring them in with the science of food that we know, with the distribution muscle that we have, with the market development expertise that we possess, and that is where the strategic rationale came in. Yeah? It's a fabulous rationale, and that is the reason there were so many suitors for this business. Now, where strategically also it made sense for us, as you know, it is not a cash deal.
Yes.
Yeah, we've leveraged our valuation. In the last 5-6 years, I said our valuation have gone up by 3.5x. Isn't it a great way to protect your future by leveraging on your market cap? And that's what we have done.
So when Unilever did the buyback, the stock bottomed out. When the Glaxo deal has happened because of leveraging of stock, is that an indication that stock will top out?
See, there are so many factors which go into valuation. Yeah, but we have acquired a business with an enterprise valuation of nearly 32,000 crores. Yeah. What are we right now focusing on? First is to get regulatory and statutory approvals as quickly as possible so that we can consummate the deal.
Next 9 to 12 months is what your guidance is.
And I'm very confident we'll get it. The second important bit is, once we have the CCI approval, then our integration teams will start working on with a very clear intent of a vertical takeoff. Yeah. From day one, we want to harness the complementary skills that the two organizations possess. Our intent is very clear to welcome the fabulous talent that GSK Consumer Health possesses, the skills they have, the capabilities they have in the HFD category. And we will be, in a year's time, a business bordering on 40,000 crores. GSK Consumer Health will be about 5,000 crores. So you're talking about a 45,000 crore business. So from the lens of GSK Consumer Health, they will be in a business which will be really 9 times bigger than what they are. So that much more opportunities for them. And we are a very diverse and inclusive organization. In many ways, the history of GSK Consumer Health in India and the history of HUL in India goes hand in hand. The decades that we've been in the country, they have very clearly purpose-driven business. They have great talent, trusted brand. And so it is a marriage made in heaven. So we are absolutely excited about this great acquisition. It's very strategic and very transformative for us.
GST implementation has been smooth. There were initial hiccups for the industry, but then it's been smooth. You managed to cut your costs down, you managed to centralize things. So that one-time big reboot which came because of GST implementation, is that behind HUL or that will continue to just grow? You'll continue to mount on it?
You look at it like this. What were the things? Why we are as a company so much in favor of GST? First, of course, is that it brought down the effective rates, and we were able to pass on the benefits to the consumers. Yeah, which gave a very clear fillip to the consumption in the country and in the industry. That's one. Second is level playing field. Yeah, people who had been evading taxes would find it difficult to do it. I think that is, once the GST in its original form, with all e-way bills, etc., gets implemented, that's when the level playing field will start to happen, which may take a bit more time. But the third important leg is supply chain efficiencies. Yeah. Now, we used to have over 40 fulfillment centers in the country, and we have drawn up a plan to halve them in the next, from the time of GST for the 3 years period. So that's still a work in progress. Now, linked to a fulfillment center strategy and a winning in many India framework, we are re-looking at our entire supply chain strategy. Yeah, and these are the 3 big benefits of GST. I think GST has been a fabulous reform in the country, and the full benefits of GST are yet to pan out, but it's absolutely the right thing for the business and right thing for the country.
Thank you for joining us. On behalf from everybody from ET, thank you for patiently answering all our questions, and wish you a wonderful year ahead.
Thank you so much. Always been a pleasure.
Thank you very much.